Welcome back. I'm Pratap here. Today is 9th October 2024. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. Before evaluation of these reports, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you click on the tab posts. Some of you might be seeing the tab community. So then you can click on the tab. You get an access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. Just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training video lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So in the video description, please find the Telegram channel link and join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other very important updates, we will be providing at our Telegram channel. Now let's get into the analysis discussion. Yesterday end of the day report, we identified 10 high liquidity zones for our today's trading session. Out of the 10, we got 3 good trades, very good trades. Let's discuss them. First one is the Tata Power. Tata Power is a daily high liquidity supply zone. This is a drop-based drop. This is not the base candle. This is the drop candle at the hidden body. The moment you add the hidden body, this is a drop candle, a leg-in candle, base, and then drop. This is what our software identified. Now we fine-tune this zone with 75 minutes time frame. I have identified this is a drop, 2 base candles and a drop. And in drop-based drop, this is the fine-tuned 75 minute zone. Again, inside this 75, you need to identify a fine-tuned 15 minute zone. So we have a fine-tuned 15 minute zone here. We have a rally, base and drop candle. This is the 15 minute zone. Within the 15 minutes, so you have to identify again a fine-tuned 5 minute zone. So in 5 minutes time frame, look into this area. You don't have any proper 5 minutes fine-tuned zone here. So this is a drop candle, this is a drop candle. There are no base candles in between. Easily this zone, 15 minute zone will be violated. But interestingly, here you have a drop, base, drop, the 5 minutes zone. Drop, base, drop. This is overlapped with this 15 minute zone. Not only overlapped with this 15, it is also overlapped with the 75 minute zone also. This is 75 minute zone is a fine-tuned zone. Inside we have a fine-tuned 15 minute zone. Both these zones are overlapped with this 5 minute zone, but this happened at the distal line. But this zone is originated before the creation of the 75 and 15 minute zones. This is the concept you learned. Lower time frame zone as an origin to the higher time frame zone. In that zone, we have a very strong institutional order flow. That's why this is a drop-based drop. You should plan the trade. So at fine-tuned of type 2 proximal, we plan the trade to minimize the risk. This is drop-based drop. This is the original zone. Now I made it type 2 proximal drop-based drop. Here we planned a trade. See what happened today? The prices entered into this area. At what time? At 11 o'clock 30 minutes. The prices entered. We got the entry. And after that, see the rejection. And then finally came. Prices reached this 15 minute zone. This 15 minutes area, again you have 5 minutes fine-tuned. This is a rally, failed ERC candle as a leg in. This is a rally, base rally. This is the 5 minutes, which is inside the 15. Here you have a 15 minute zone. But 15 minutes rally, base rally, this base candle is not really very clear whether to consider medium or again it is a failed ERC. Some benefit of doubt. That's why looked for the fine-tuned 5 minute zone. Definitely this is not a leg, because some people may say rally base rally in the 15. This is not a leg out candle, because the leg out is closed inside the zone. It should not be closed inside the zone. But here it is not the case. Slightly came out of that. So that's why fine-tuned 5-minute zone area we planned, and today see the price has finally reached. At 15:10 it reached the target. Today at 15. After it reached again, started moving up. But anyway, after that market is closed. Here strong order flow is there inside this. But anyway, how much profit Tata Power has given? Tata Power has given a very good profit. See, Tata Power has given 12,420 rupees profit, which is 8.9% ROI. This is a daily high liquidity zone. So excellent trade. But this is the maximum opportunity it has given to us. And the next one is IEX. IEX is quite tricky. Some experience is required to plan this trade. It's not easy trade, but I will explain. This is a 75 minutes high liquidity zone, IEX. We have a rally candle. We have 1, 2, 3, 4, 5, 6 base candles. Something wrong here. I think this one is considered as a leg-in. This is the leg-in. This failed ERC is the leg-in. 1, 2, 3, 4, 5. No, this is the one, I think. Rally 1, 2, 3, 4, 5 base 5 and 6, because this is the medium size leg candle it considered, because volatility is very high. So that's why it looks like some of us may think this is a drop candle, ERC candle, but software considered this as a medium size candle because volatility is very high in this stock. This is the first clue you should remember. Why I am telling you will understand later. Always remember, volatility is very high compared to the others. See, very big large candles. Compared to that, see here, these are all small candles now. How all of a sudden they changed. Earlier they looked like big candles, right? Now all of a sudden how they changed when you are comparing with all the others. Software will do all these calculations internally. But the problem with visual representation with human is this is the problem. Because of these chart applications. Because chart applications, they shrink the charts when the earlier candles are very big candles. But actually according to supply demand zone price action, based on the earlier candles, you need to consider which is the small candle, which is the big candle. Why I am telling this point? Now after going to the 15 minutes time frame, you will understand that. Now you see. How do you feel? This is a rally candle. This is a base candle. This is a medium size leg candle. This is a base candle. This is the medium size leg candle. This is a base candle. This is the drop candle. If that is the case, you should draw the zone like this. Drop, base, drop. The 15 minute supply zone. Do you agree? Yes, but instead of drawing this, how I have drawn this? This is the rally candle, base candle 1, 2, 3, 4, 5, and then drop candle. This is the way I have drawn. Why? What made me to keep these medium size candles part of the zone? This is a clear drop, base, drop. Actually, I am considering all these candles are not as a medium size candle. I am considering all these candles as a small size candle. Small size candle, even completely they are having 100% filled, still they are part of the base only. Small candles, we don't look for the 50% percentage or 75% percentage body, we don't look for that. Medium, if it is a small candle, by default they are part of the zone. Now you see, Now comparing with all these things, now rally, all these are all small candles. Base candle 1, again small candle, base candle 2, again small candle, base candle 3, again small candle, base candle 4, again small candle, base candle 4. Now a drop candle. Because when you are comparing with the earlier, the volatility in the market, all of a sudden all this candle, the moment you expand and only seeing the recent price action, now it is giving some misinterpretation. First, to be honest, first I also considered drop-based drop, but after that some interesting point made me, and finally I decided all these are all small base candles we can include as part of the base. This is what experience. What made me to consider this entire thing as a zone? See here, new zones are getting created here, LOTL. This is a zone, a new zone. Again, this is a zone, new zones. Some interesting thing that is observed even in 5 minutes time frame I observed. Generally when these new zones will be created, LOTL zones, maybe it is a high liquidity area, then new zones will be created. To cross check what I did, I went to the 5 minutes time frame. In the 5 minutes time frame, you see, many times these new zones should violate, but that didn't happen. Rally, base, drop. See, next time prices reached this fine-tuned area and prices came down. Again here rally, base, drop is created. See, next time again prices entered, they came down. Again they entered, they came down. That means this is acting as a high liquidity. Now it is violated and again came down. And again a new 5 minute zone is created within this area. Every time a new 5 minute zones are getting created within this entire area, they are working like a very strong institutional order flows. We always identify order flows in 5 minutes time frame. Because 5 minutes time frame, we have fine-tuned zones, they act as institutional real order flows. And now I confirmed, okay, I went back to 15 minutes time frame. Then I comparing with all these candles. Now I consider all these are all small candles. They are not medium sized candles. All these small candles we can keep inside the base. So this entire thing is the base. In this area only institutions are again and again creating new order flows. Okay, previously went and prices came down. Any new order flow institutions created in this area? In this is 15 minutes area. In the 15 minutes area, earlier prices went up to here and then started coming down. So in this move, within this area, institutions created any order flow. Go to the 5 minutes, you will understand. So in the 5 minutes, in the recent price action, institutions created a drop-based drop. This is the area. Earlier, all the 5 minute zones they worked very well. At least one test, minimum one test they have given. See, rally-based drop. This is the retracement and gave the profit. Again, next time within this drop-based drop, this is the retracement. Again, they gave the profit and came down. Now, in this move, prices came down. Institutions created a new 5 minutes fine-tuned zone inside this 15 minutes area. Drop-based drop. See, today what happened? Prices entered and from here it came down and reached the 15 minutes target. When it reached the 15 minutes target, at 14:45, 2:45 it reached. When it gave us the entry, at morning 9:35 it gave the entry. So 5 hours continuously it holded the trade and finally reached the target, IEX. This is the 15 minutes target. Let me go to the 15 minutes time frame. See, drop base, rally, rally, rally. And gave the entry and finally reached the target. So how much profit IEX has given? IEX has given 19,500 rupees profit, which is 8.4% ROI. But here 12,000 itself we got 8.9, but 19,500 why we got less profit? I mean less ROI? because ROI is calculated based on the futures margin cost. Here, this Tata Power is having around 1,30,000 or 1,40,000 futures margin cost. But IEX is around 2,20,000 something it is there. So that is the reason why ROI is slightly less, even though profit is more. Because your investment is more, you got more profit. But ROI is less compared to that. And the next one is Jindal Steel. Jindal Steel is a very interesting. We don't have a fine-tuned zone. Still it gave a profit based on bull trap. This is a 75-minute zone. See, drop, base, drop. We have a bull trap here. Once the zone is violated, it picked up the orders. First, how we fine-tune? Because we didn't fine-tune up to 5 minutes time frame. I left it at 15 minutes level. Let me tell you the reason why. So anyway, according to the software, this is a drop, 3 base candles and a drop. Why it is a drop? Add the hidden body. The moment you add the hidden body, this entire thing is a drop. Up to here, this entire thing is a drop. This entire body will be changed to the wick based on the dynamic view point of view. See here, from this previous close to this area, it was a drop. Today morning when market is opened, this entire with open, this is a big drop. Even further more drop, it was the candle. After that again prices were recovered, they moved up and closed here. Still we got a sufficient body. From the close to here, we got still sufficient drop is there. That way, software cleverly calculated. Many people, they ignore these zones. But for software cleverly calculated this. That's why this is a hidden zone. The hidden zone concepts we discussed in our lesson 9.3 and 9.4 in our training videos. Next, go to the 15 minutes time frame. In the 15 minutes time frame, this is somewhat compromised and drawn. Even though it is looking like a base, I considered maybe it is a failed ERC. Not really 100%, but some level. Legging I compromised to find the fine-tuned area. 2 base candles and a drop candle. Again, hidden body, you will be getting a big drop here. And within this area, any fine-tuned 5-minute zone? See all the candles, base candles, 1, 2, 3, 4, 5, 6, 7, 8. Maybe this could, clearly this is a ERC candle. No doubt in this. Very big candle. Failed ERC as a legging, but all these are all so many base candles. So when so many base candles, this zone will be easily violated. See, that is what happened. See, easily violated. This is morning 10 o'clock 45 minutes candle, and then next candle it is violated easily. But above there is a drop, base, drop. This may work as a bull trap. There are higher chances. The reason is when I draw wick to wick, you get clarity. See, when I draw wick to wick, this zone is almost overlapped with this. Just a difference of few paisa. Small gap is there, it is not visible. See the high of this candle. The high of this candle is 1,006 rupees 90 paisa. See the low of this candle, 1,007 rupees. Just 10 paisa difference is there. There is a gap of 10 paisa. Otherwise, this would have been worked like lower time frame zone as an horizon to the higher time frame zone. That way also this works. LTF, lower time, just 10 paisa difference. And moreover, with type 2 proximal, it is a clear trap area. Because why we have taken type 2? To minimize the risk. And finally entered into the type 2 proximal entry. It gave a little further moved inside and then came down. Finally, what should be our target? Our target should be 15-minute zone. Maybe this rally, base rally. But unfortunately, prices didn't come because there is a 1-minute high liquidity zone that is preventing the, because many times it is preventing the prices. Go to 1-minute time frame, you will understand. We have a rally, base, rally. See, many times, see, it is tested, again tested, again tested. It's not letting the prices go down. Maybe that is the reason why after you taking the entry, this is the area you can exit. Even if you would have tried again, prices moved up, and once again they came down here. Maybe if not, if you exited here, you might have exited almost after, this is at 1 o'clock 21 minutes and this is at 2 o'clock 25 minutes. After 1 hour again you might have exited same level. After wasting 1 hour you might have realized. So that's why either exit here or exit here, because this is the 1 minute high liquidity zone. See, finally at the almost closing hours of the market, this zone is slightly pierced, and again maybe some buffers might have added, stop buffers, that might have pushed the prices up and again came down. The same area again moved up. So this was the right place, because this is preventing the prices to go further down. That's why at some point of time you have to realize this is the area you need to exit instead of going for this 15 minutes target zone, because prices didn't reach this 15 minutes target zone. According to the trade plan, this is our entry, this is our exit. But this 1 minute zone, never let the prices go below this. That's why you need to exit somewhere here, either here or here. Okay, with this 1 minute till this 1 minute zone, target zone, how much profit it has given? It has given 6,468 rupees profit it has given. And 4.8% ROI it has given. And who did this bull trap, which is above the 75 minutes high liquidity zone. Okay, this is about Jindal Steel. These are the 3 successful trades. Few zones are violated, but we identified they are going to violate. I think Alchem is the one. This is a 75 minute zone. Rally base drop. See, today morning candle, it is easily violated. The reason why it is violated is there is no proper 15 minute zone. See, look into this 15 minute zone. You have a rally candle, you have base candle 1, 2, 3, 4, 5, 6, 7. 7 base candles and then drop candle. Clearly it indicates this zone will be violated. That is what happened. Because clearly you learned the concepts in lesson 16 when a zone will be violated. All these scenarios we discussed in lesson 16. I think second part of lesson 16. So this is the one, and another one is I think it is a lupin. Lupin I didn't fine tune. This was the fine tuned zone previously. This was the zone we fine tuned earlier. I explained in the when this zone, this is a daily zone. I think probably on this day, because this candle near to the zone, I'm not exactly sure, but 27th September we might have I might have explained you this zone. If you look into that video, probably I might have explained you this zone will be violated. Because this was the candle stocks near the zone. The same whatever we fine-tuned on that day, 27th September, the same thing only today executed. I didn't change anything. So that's why directly I am going to the 5 minutes fine-tuned area. You can look into this video, 27th September video, how we fine-tuned, you will understand. That day I told you don't take trade in this zone because this is already tested. Let me tell you, actually it is a type 3 tested. Type 3 proximal tested. Not even type 1, type 2. Type 3 also tested. See here. This is the ERC candle, 3 base candles and a drop candle. The zone is like this. Even type 3 also we have seen. Type 3 also the zone is tested. So that day I explained that we won't take this zone anymore further because the type 3 level is also tested. So next time this zone will be violated. Unless institutions decide to create a new zone, otherwise this zone will be violated. See, that is what happened today. today the zone is violated. This is today's morning, I think today's morning session, prices came and started moving up, and finally it was violated. So this is about Lupin. Next one is Jubilant Foods. This is a daily zone, daily demand zone. This drop base rally is the daily demand zone. Today prices didn't come into this fine-tuned area. How I fine-tuned? Go to the 75 minutes time frame. This entire thing is 75. This is the ERC candle as a leg-in. You have 1, 2, 3, 4, 5 base candles and then a rally candle. Now look into the 15 minutes time frame, because this is an interesting analysis. The 15 minutes, all these candles, look into that, base candles. That means this 75 minute zone will be violated easily. But even then I have drawn a drop base rally. Drop base rally. Earlier it picked up the orders from this 15 minutes zone, and then lot of time the prices were stayed here. Definitely this 15 minute zone will be violated. Then you might ask a question, then why I have drawn this drop base rally? This is not overlapped with 15 minute zone. Actually slightly overlapped here. Sorry for my mistake. Slightly overlapped here. Just slightly overlapped with this, because I marked it wrongly earlier. That's why this gap has come. But what I planned is this drop base, a drop as an aggressive trade I planned. But this is slightly overlapped at the distal line. Drop base rally. 5 minute zone is not overlapped, but 5 minute zone, let me go to the 5 minutes time frame. But 5 minute zone is a type 2 proximal. Drop. I have a concern about this candle actually. This is the candle I have a concern. Looks like a big rally candle. Failed ERC. Prices came down at some point of time. After that prices were moving up. Failed ERC. Failed ERC as a rally in dynamic view. But still I kept this in the base. If the risk is high, you have to go for type 3 proximal entry. But this is the only one. I have some concern about this candle. And type 3 proximal here. Sorry, type 2 proximal. And if the risk is big, we can leave this. If risk is within the limit, maybe we can try, because before this 5 minute zone, some rejections before. Prices moved up, again came here, prices moved up, 5 minutes point of view. But this is really some concern about this candle. But you see, when you zoom out, they looks like small candles compared to the earlier candles. But anyway, this is how I plan for the aggressive trade in this area. If the risk is high, you want to just ignore this. If the risk is low, you can accept a trade. It's all depending on your risk management. But anyway, prices did not enter into this area. Next one is idea. This is also a daily zone. A daily supply zone. Drop base drop. This is fine tuned with 75 minutes time frame. Drop, 2 base candles and drop. This is what? 75 minutes area. Again within the 75 minutes area, fine tuned with 15 minutes zone. I consider this is a medium size drop candle, 3 base candles and a drop candle. This 15 minutes area again fine tuned with 5 minutes time frame. In the 5 minutes I consider this as a rally candle, 1, 2, 3, 4, because all these 4 candles you see, they are in a narrow range. That's why this is my interesting area. And then drop. But anyway, today prices did not enter into this zone. JK Cement. I think JK Cement yesterday we discussed, right? I already explained this in yesterday. So I'm not explaining again. Today prices didn't enter. So we didn't plan a trade. And the NTPC. We have a drop, 2 base candles and a drop. Multiple order flows are there here. NTPC. 75 minutes. Rally, 1, 2, 3, 4 base candles and a drop. Again here you have a drop, 2 base candles and a drop. This again I fine tuned with 15 minutes time frame. We have a rally, 2 base candles and a drop. Here you have a rally, 2 base candles and a drop. This is 15 minutes fine tuned zones. And again 5 minutes. This is a rally, 1, 2, 3, 4, 5 base candles and a drop. So this is also a rally, 1, 2, 3 base candles and a drop. And here also I have a concern about this candle, this fine tuned zone. Is it a medium size candle or is it a ERC candle? Some concern I have. That's why this zone is not really, I'm comfortable with this fine tuned, but we have fine tuned, but I am not comfortable. Generally, if you ask me, I don't plan a trade in this fine tuned area. But I want to see what will happen to prices when they are coming here. Sometimes the trade may work. Maybe if that is the case, my concern is not really a concern. If really it is violated, whatever I having concern, probably my concern is right. So that's why with the benefit of doubt I run, but not planning the trade, just to observe the price action. But anyway, prices didn't come. But here we have an aggressive trade setup. We have a drop, 3 base candles and a drop. Why aggressive trade setup? Prices came and down. See again, prices came up and came down and then took the trade and came down, gave a good profit. But this happened yesterday, not today. Today you can't plan a trade in this because these prices went deep, almost close to the digital line. Maybe few paisa before. Almost they are about to touch the digital line. That's why you can't take any more trades in this. Not only that, this is already tested and tested also deep inside the event. So you can't plan this zone in today's trading. Just want to tell you, there is an aggressive setup is available and which was worked very beautifully yesterday, but not in today's trading. If this stock was listed yesterday, maybe we would have got a good trade yesterday. That is what I am trying to say. But anyway, yesterday our software did not filter this stock. So that is the reason why we don't have this opportunity today. I am deleting. And today market started here. They didn't go to the zone. So we didn't get any trade opportunity. Tata Power we discussed. Voltas also. Voltas we didn't discuss. Voltas is a daily high liquidity supply zone. We have drop 1, 2, 3 base candles and again a drop candle. This is how software identified, and this we fine tuned with 75 minutes time frame. We have a rally, 1, 2 base candles and a drop candle. Within the 75 we fine tuned with 5 minutes time frame. We have a rally, 3 base candles and a drop. within this 15 minutes area. Again, we need to fine tune with 5 minutes. But see, all the 5 minutes candles are all small candles. This zone will be easily violated next time. So that's why we didn't plan any trade. But today also prices did not enter into this zone. Voltas, there is no trade plan. And Alchem is violated. We already identified IEX and Zindal. Both we discussed and we got the trades. So these are the 3 trades we got today. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.